China's indication in Durban that they were ultimately going to be willing to take on some sort of cap, probably by 2020 or something like that, is clearly the signal the world's been waiting for in a while for that. And clearly China is trading treasury bills for green technology as fast as it can right now. The $100 billion a year, whatever it might be at this juncture, that China has put into this market, whether it is in technology or project development. You looked at, I remember in the Bali conference in 2007, the head of the World Global Wind Energy Council said to me, I was on a buffet line with him, he said, I was just in China, 2 years ago, China didn't really have a single wind fab. In 2 years, they'll be the biggest in the world. And I kind of laughed at him, and it's, as China does in most markets, when they put their mind to it, they put their capital to it, they take them over. And that's what's happened in solar, that's what's happened in wind. Absolutely right. But the point is that if you were China thinking strategically and you were sitting on an enormous number of treasury bills right now, would you be trying to trade those for productive assets? I would. I think it's a pretty substantial risk to be sitting on U.S. currency if you're China right now, and I think it's a very logical thing to do. And if they start pushing the global market into a lower carbon future, they want to be a supplier into that. And
Tom Heller?
You probably have.
I mean, yeah, I have pretty strong views on this, and we have lots of people working in China, so some exposure to the questions that you're asking. And I think it's a combination of several different things. One thing that we all know is it always depends where you look to figure out what you see. Okay? And if you're looking for various types of carbon taxes or cap and trade systems, whether at the international level or the national level, that's not what you're going to see if you look in Brazil or if you look in China or if you look in Indonesia. You may see that in a few years for reasons that we can think about. But what you see right now are very large amounts of money that are flowing out of the public sector, that is, out of the government, to give incentives. Sometimes they were set up in ways that are not consistent with the trade rules when they specifically subsidize exports. But the Chinese stopped that pretty quickly. And now they are quite consistent with the trade rules and what they're doing. And they basically do the reverse of the cap and trade system, right? Instead of putting a cap that puts a price on the stuff that produces carbon, they in effect give an incentive to do the stuff that doesn't produce carbon. And this is what we see in very large amounts. Call it a subsidy if you want. I think it's actually very hard to define in Western terms whether the Chinese or the Brazilians are subsidizing. Because what we think of is a financial system where you've got a cost of capital established in markets by private institutions, private banks, private actors. That's never been the case in China. It's not the case in Brazil either. You have a public system of banking that has always been used as a way of delivering finance for developmental purposes. And this is flourishing, but it's not easily transparent to us in many ways, because very often the real subsidy is in the terms of the loan or the terms of the nature of the grant that is given in a complementary way. So you have to start to unpack the way these systems do policy, which is different than the way we do policy in our own countries. Now, having said that, the Chinese, who have spent a great deal of money, ended up spending it in the past 5 years, principally to put new equipment that is much more efficient than the equipment they were using. And so it used much less energy, which was largely coal-based, so it had much less carbon come out of it. And they did this in their top 1,000 companies that are owned by the central government, something we don't have. And they paid for this out of this very complex financial system that supplied the capital to do this. A totally different type of activity, but What was it reflecting? And then I'll throw this back open. I think it's reflecting an understanding that for very specific reasons is appearing first in the places we didn't expect it to occur. I think that what is being grasped, certainly in countries like Brazil and Indonesia, which are really resource suppliers, if you think of them, and certainly in China, which is the largest resource consumer in the world, they are looking at the fact that the price of resources is going up and is going to stay up. And when that happens, you're going to have to readjust your production profiles, your investment profiles, and they are anticipating the fact that this is going to be the trend of the next 20 years, which is already upon us. Why aren't we doing that? Well, I'll just suggest that we're preoccupied. We're preoccupied with a financial crisis that is more than a business cycle problem, that goes back to some of the assumptions we made about how financial markets worked, that the Chinese and the Brazilians never fully bought into. And I think it has a lot to do with the shift of production from the West into East Asia. And so this clouds our vision, because these are short-term problems, and the resource productivity problem is a long-term problem. But Marc will correct me, if we go back to when we thought about the carbon trading system, what was the price of oil? $10 a barrel? 1992, 1993, when we started?
Yeah.
Where was all the capital in the world? It was in the West. What was happening? Europe was completing its market. The United States was triumphant over the Soviet Union. Yep. China, India was bankrupt in 1990. China had not really started to grow. Ask yourself what the world we're living in now looks like compared to that, and how likely is it that the ideas we came up with under those conditions are the ones that are likely to prevail under the world into which we're moving.